discuss about a very important aspect of accounting equation, which is the profit. What do you mean by profit? Profit means simply sales minus expenses. From the sales, if you deduct expenses, you will arrive at profit. Who owns this profit? Normally the profits are owned by the business owners. So therefore the profit will have to be adjusted against the equity. So in this case, sales will be added to the equity because sales will increase the equity value, and expenses will have to be deducted from equity, so it will reduce the equity value. In order to make a profit, your sales value has to be greater than the expenses. So when the sales exceeds the expenses, company will make a profit. Sales means goods or services provided by a company to its customers. So you can say goods or services provided to its customers. Whereas expenses means the cost incurred by a company in order to provide the services. Cost incurred by a company to provide services. In this case, let's assume the cost incurred by a company is around $100,000 and company has made a sales of $150,000. So thereby the company will make a profit of $50,000. So this $50,000 has to be adjusted under equity because the profit is owned by the business owners. The business owners' liability represents through the equity. Now let's look at two ways of recording the profit in the accounting equation. Now let's look at these particular transactions and we'll see how we can record this transaction in the accounting equation. Computer repairing company earned an income of $10,000. So there is a company who provides computer repairs, and the company has earned a service income of $10,000. So what is the impact on the accounting equation? So there are two impacts. First one is the company will receive cash worth 10,000. So it will have an impact on our asset, and on the other hand, the income part or the profit of 10,000 belongs to the equity owner, the business owner. So therefore it has to be adjusted under equity. Since the company has received cash 10,000, your assets, under assets, your cash will increase 10,000, and since it's an income belongs to the owner, income will increase by $10,000. So this is how you record this particular transaction in the accounting equation. Now let's move on to the second transaction and we'll see how we can record this in the accounting equation. Company has sold goods worth $10,000 for $15,000. So what has happened? Company had some stocks worth 10,000 and it was sold for 15,000. What we can understand from this particular transaction is the company has sold goods worth 10,000. So company had goods worth 10,000. So it's an asset. It's an asset. Company had an asset worth 10,000. This asset was sold for 15,000. So when you sell, you will receive cash. Okay, so you are selling goods worth 10,000. You are selling one asset and you are receiving cash for the goods that you have sold. And the third one is the difference between the selling price and the cost of the goods. So which is we treat as profit of 5,000. So profit is owned by the equity owners, so therefore it will be adjusted under equity. So since goods are sold, your asset will reduce by 10,000, goods minus 10,000, and the second impact is the company will receive cash 15,000. So here the total impact is, the net impact is 5,000 increased, cash increased. Therefore, in order to balance this equation, you have to adjust the equity column by saying profit of 5,000, the difference between the selling price and the purchase price.